We may find that our data in Kenya echoes many other sort of scenarios that we're seeing in the wider region. So the first point to note here is that between 2016 and 2021, farming livelihoods, farming as a main source of livelihood, has declined very dramatically. You know, we've seen a bigger shift in farming, away from farming, than we have, you know, in terms of all other of the livelihood groups that we look at in Kenya. So that's kind of interesting and probably in some ways kind of rather concerning. That's just a 5-year period from 32% of the population earning their main source of income from farming down to 18% in 2021. And in population terms, that's sort of gone from sort of nearly 7 million farmers to more like 5 million farmers. Of course, we know that there are people who also earn their living from farming in a sort of subsidiary way, or who are subsistence farmers and so forth, but this is sort of talking about farming as a main source of livelihood. We also know, of course, very familiar with this data, we've discussed it endlessly even today, that, of course, farming livelihoods are under huge pressure. And in Kenya, for example, 88% of our land is actually classified as dry land, with only 12% really being in that productive category. And since the 1960s, which is that sort of middle map there, you know, down to the present, 2019, we've seen that, of course, with population growth, we've had a lot of encroachment into what we would call these dryland areas, which are sort of very fragile areas in which to conduct intensive agriculture. But more and more people are trying to eke out a livelihood in those settings. As a result, of course, you know, farmer challenges, you know, drought and climate-related challenges are mentioned as the sort of most, the highest sort of challenges by farmers in 2021. Not surprisingly, particularly because we're in a drought period at the moment. So we have drought, pests and diseases, but we also have farmers suffering from high cost of inputs, and we see that for our small businesses as well. That's become a major challenge and difficulty. Sorry, it's not quite complete, the text there, but in sourcing capital and so forth. Oh, hang on, what's the second chart there? Let me just see if it's interesting or not. Okay, so that's right. So maybe I was connecting this to the drought issue, actually, that we've got 5% of our farmers actually using insurance, even though we've got a much higher percentage facing these different kinds of challenges, including weather-related challenges. Again, I mean, as a result of this sort of very volatile sort of situation in which farmers are placed, farmers actually tend to have lower levels of financial health than other populations, although we've seen for other populations that financial health has really dropped between 2016 and 2021. Yeah, and then going now to finance, I mean, I thought it was kind of interesting to sort of see what are the main sources of finance for farmers. And again, there's a bit of a gender difference here. You can see women in the orange and men in the blue. That wasn't me who chose those colors, by the way. But most farmers are sort of turning to reinvestment from their farming incomes to finance their farming. But a large proportion of women in particular turn to friends and family and chamas, which are informal groups, to finance farming, with mobile money coming in more strongly for men, but in much lower proportions. And in terms of the reasons driving their choice of financing solutions for their agriculture, the most mentioned reason was that there is no other option. Yeah. And so I think that's an important kind of takeaway here, that farmers just don't feel they have choice out there. They don't feel they have access to other financing mechanisms. So, yeah.
Sorry to interrupt. When it talked about on the previous slide about agri being their source of income, is that their sole source of income, or how many farmers are doing this as a side hustle or as a creative income?
So, here we have kind of more detailed numbers. Farmers practicing farming as a key source of income is about 5 million farmers. And that's the data that we've used in categorizing our livelihood. So the livelihood categorization that you see in the chart is by main source of income. Yeah? But we've also got the numbers here showing adults who practice farming and who earn sort of subsidiary income from farming, or who are subsistence farmers and so forth. Yeah, and so, yeah, I can give you the presentation afterwards, yeah. So for the financial health data, for example, that is farmers who have, that's their main source of income is from farming. Yeah, and then on to digital. And again, this is very aggregated data. I mean, we've also got this data broken down by farmer segments. We haven't got time to show that today. But just to give you a sense that, I mean, as with many other livelihood categories in Kenya, farmers are still sort of very cash-based in terms of their livelihoods. But there's been a shift into digital between 2019 and 2021, quite a dramatic shift, actually, with over a quarter of adults actually sending payments digitally, fewer receiving payments digitally, but still not, you know, a substantial shift there, which is perhaps representing somewhat of an opportunity, particularly relevant for this session today. But we've also got data which tells us that farmers generally sort of have lower levels of what we might call financial and digital capabilities. The chart on the right is that, yeah, it's your right as well, is really for rural populations more generally, but it's kind of indicative, and it's using sort of a financial literacy metric to look at literacy levels across the population. We see that people in rural areas have substantially lower levels of financial literacy than those in urban areas. And then for farmers, again, we see far lower levels of smartphone ownership among farmers. So that's also something to note. Now, again, I don't want to spend too much time on the Finaxis data, although there is a lot of it. We've just released a county report, actually. So those of you who are interested in Kenya might want to look at the county report, because it will be much more relevant to the farming livelihoods that we're considering today. But I just wanted to kind of round off with a couple of conclusions, really. So, you know, first of all, you know, why are farming livelihoods so steeply in decline in Kenya? And I wonder, to the extent that that's echoed in other countries that we have represented in the room, I'd be very curious. Is that better? Mm-hmm. Okay. And so, you know, that begs the question, is digital technology the answer in terms of improving access to value-adding finance for farmers? How do we better leverage data and technology to reduce costs and risks, not just for suppliers, but also for farmers themselves? And then how can we better reach women farmers? Actually, I think I had revise that slide, but anyway, we can use that as my concluding slide. I also wanted to just actually ask some sort of broader questions. I mean, I think one of the, Betty, I think that was actually, there was the other presentation, but anyway, it doesn't matter, because I had a couple of slides on the segmentation of a couple of our farmer groups. So I had some slides on value chain farmers versus food crop farmers. And one of the interesting points for me that came out of those slides was the fact that value chain farmers, you know, in both cases, their highest goals were financing education and financing business. And then 10% were sort of focused on financing inputs and agriculture. So it's important to note, for me, one of the takeaways from that was that it's important to note that, you know, farmers they have livelihoods, they have diverse livelihoods. It's not just based on farming. So are we financing the farmer, or are we financing farming? You know, we're very focused in terms of our sort of design of products and solutions on farming as an activity, if you like, as a production system as well. But really, when we're talking about farmers, they're embedded in a much broader set of livelihood goals and livelihood activities, and we need to be cognizant about that. You know, I also had a question. Sorry if I had my updated slides in front of me. Sorry, but I don't have those. But and I think another question is how far, you know, given the levels of digital and financial capability, you know, how far can we leverage technology? What kinds of information, this is what we're going to be hearing about today, will help us to unlock value for farmers. And then who are those sources? I mean, who are we trying to serve here? Because when we're leveraging information to unlock value for farmers, is this really sort of to de-risk the solutions that we're sort of providing for farmers as suppliers of finance? Or is this really to add value for farmers themselves? Because a lot of the discussion tends to be focused on how do we leverage information to sort of mitigate risk, and that's risk in lending, risk in providing solutions. But what about the longer-term game for farmers themselves in terms of production systems that they're involved with and longer-term livelihoods? So, yeah, the question about who are we providing solutions for, I think, is important here. And then I had a final point, but it may come to me later. But I want to just hand over now, actually, to our first set of speakers. So we have, to kick us off, we have a session on credit scoring, and we have Florence Kariuki and Deo Masawe, who, please, could you come to the platform, the whatever we call this, the stage here, and then we can kick off with Florence. Karibu. Florence is from the Equity Group, and Deo is from BK Tech House. And they're going to give us some insights into scorecard development and the use of sort of data, which is both banking data and data from the wider production system to help to develop lending products for farmers. So, Florence, over to you.
I have a big challenge today to keep us all awake. And the other thing is to speak especially on financial inclusion. I will speak as a layman, but I'll try to throw in the words I hear IT people use in our meetings. But I'm speaking from a perspective of somebody who consumes data to make decisions, and especially lending decisions. So I'm representing Equity Bank, and I will start with just giving us a context of what we believe financial inclusion is, and towards the end of my presentation, then get to the credit scoring part. So, Equity Banks, as a matter of introduction, Equity Bank is a commercial bank. It's the largest bank in Kenya, but it's also a bank in the subsidiaries of Kenya, Uganda, Tanzania, Rwanda, South Sudan, and DRC. So in terms of our business model and strategy, we are inclusive. We have a model that is high volume, low margin. And in the current times, we are using digital, and we want to give our customers an experience. And we are also very much aligned to the use of agile and quality-driven data to align our business model. And why I say in the current times is because of what the COVID times have shown us as a business. So in terms, again, of the bank, we have our geographical expansion and business diversification impacts on our group's value creation and growth. So in terms of all the regions that we are in, we have to ensure we have uniformity in our offering in terms of service and products. Then again, strengths of efficiencies of business transformation through digitization. So you realize my presentation will focus more on digitization. Then we have a shared prosperity model with a twin economic and social engine. So if you see my introduction, it read Equity Group Foundation, but Equity Group Foundation is the social arm, Equity Bank is the commercial arm, but the two work hand in hand. And this includes society and host communities as key stakeholders through payment of dividends on social impact investments. Again, into context, it's a bank with over 17 million clients and growing. So again, this is to give us just an idea of how many clients we are serving and why we need the kind of channels that we have. And then the COVID-19 pandemic increased the rate of adoption of digital technologies by our customers. And I like what you have said in the statistics. I could see between 2016 and 2021, there was a skip of 2020, but we could see either the numbers have dropped, and it's because, I believe, of what COVID has taken, the impact of COVID on business. So in terms of regional footprint, I have said in terms of the countries we are in, but in terms again of branches, agents, and point of sale services, you can see the numbers. I don't know whether you can all read, but we have a network of 61,000 agents. Agents are small banks, and these are banks that are in the village. Those of us who are from Kenya, it's your kiosk, meaning as you go to buy your soap, your bread, your milk, you can also transact. You can also transact your banking services there. Point of sale terminals, this is anywhere you can use your card to pay. We have about 36,000 of that. Point of sales, again, which is ATMs, we have about 600, going to 700. But in terms of digital channels, you can all see the number, and it's increasing because over time, our clients are changing the way in which they want to use the bank services, and they want to self-serve. So by self-serve mean I don't want to come to the bank, but I want whatever I have on me. Is it my mobile phone? Then I can complete my transactions there. So we have been slowly saying that the bank is not the place you go to, but the bank is what you do. Nowadays, the bank is not the place you go to. So in terms of digital channels, we have a mobile app. We have Easy Loan, which is the digital way in which our clients get the mobile loans. We have the Easy Forex. We have our Star 247 Equity USSD. We have our Equity Online, which is a consumer digital platform. We have Easy Chama. We have Pay with Equity. We have EasyBiz, which is for business people, which is a business online service. We have e-commerce, which is an easy API. And we have Equitel as a SIM card. And we have now the acquiring, which is all the points of sales. I would want to speak more about the strategic focus of the bank and why we would want to go that way. We have a strategy that covers us up to 2025, which we have called the African Resilience and Recovery Plan. Many of you may have heard it, but in summary, the strategic objectives is to reach 100 million customers. Right now, we are at 17 million customers. So there's no other way of getting to 100 million customers unless we go digital. Out of this, we would want 5 million to be borrowing businesses. We would want 25 million to be borrowing consumers, households, people with salaries, farmers and the like. And from that, we would want to create 25 million direct jobs. But how do we do this? We do it in about 6 pillars. And of interest is what is the first pillar. The first pillar for us is food and agriculture. So we as a bank and as a foundation are very keen on the support that we give to the food and agriculture sector. And in terms of numbers, we would want to deploy 30% of our balance sheets into food and agriculture. The statistics shown when we were introducing this session, I think I've seen only 1% of credit from banks is going to agriculture. So if that is what the industry is showing, then 30% is really a tall order. But beyond that, manufacturing and logistics, you realize that if we have to go agro-processing and value addition, then we get into manufacturing and logistics. If we have to enhance market linkages, then we have to go to Pillar 3 of trade and investments. If we are to cater for the smallholder farmers, then we have to get to Pillar 4, which is micro, small, and medium enterprises. And pillar number 5 is the social transformation and environmental. This is taking care of the environment. Again, we know agriculture has been said to be one of the sectors that is really impacting the environment and the one that is also impacted by climate change. But again, of importance is Pillar 6, where we talk of technologically enabled ecosystems. So in terms of business transformation through innovation and digitization, that is our product offering. We offer our products, and that is where the financial inclusion comes in under what we can call 4 segments. Save and invest. This is your normal account where you invest or where you save. Then borrow, this is the loan. Insure, this is the insurance. And move, this is the payment ecosystem. And in terms of segments, we have corporate, large enterprise, business, and personal banking. You realize you'll not see agriculture there because for us, agriculture is cross-cutting. You'll have a corporate that is agriculture. You'll have a large enterprise that is in the agriculture sector. You'll have many businesses that are in the agriculture sector. We have seen individuals in the data that was presented, us who are seated here, salaried people who our secondary income is from farming. In terms of product design, we look at the commercials, we look at the risk, but we also look at the technology that drives it. And in terms of channels, I will not repeat because those are the channels, the digital channels that I presented. But very interesting for us, especially in the years that have been presented here, 2021, 2022. If you can see what we call the legacy bank, ATM and branches, they are on the lower level. The growth has sort of been just static. But if you can see mobile and internet banking, we are saying about 99% of our transactions in the bank are happening outside the bank. So this again informs us on what the clients really want. And as I said again, banking is now not the place you go to, but the thing you do, and you do it with your gadgets. In terms of volume and value, about 86% of the transactions are via the mobile channels, and only 14% is in the branch or in the legacy, or what we call the legacy banking. People who go to the bank, and what we have realized, these are the high net worth clients. They will be mostly the ones who are going to the branches. In terms of transaction value, it's the reverse. The amounts that are transacted, about 83% of the volume is sitting in the branches, 14% is sitting in the mobile lending, because mobile lending is short term. We have seen from data, many people will borrow around 5 a.m. in the morning, and they will repay probably the same day or the following day. So very short term, but the transactions are more. Again, if you look at the self-service channels, they account to about 98% of all transactions. What I'm trying to say, from the regional footprint that you saw, most of our customers are in the rural areas. So these customers are either farming or their businesses are impacting on agriculture. And if these statistics are anything to go by, then our farmers and those players in the value chain have moved into the digital space. As a bank, we also have a subsidiary, a fintech subsidiary called FinServe, and one of the products that we have there that we have been using for this kind of digital channels is Equitel, which is a mobile virtual network operator that provides telecommunications as well as m-banking services, hence creating the ultimate customer experience and enabling financial inclusion. There are other elements that FinServe does, and those ones I will not go into them because I said I'm a layman, but I hear of Jenga APIs, and I also hear of Jenga payment gateways. What I know is we integrate businesses for e-commerce, and we also enable payments. But again, what we have tried to do, especially with our mobile banking, is powered by Equitel. So when we look at financial inclusion and the data availability, one, I said COVID was one of the reasons why we have accelerated the business, the digital technology capabilities. Again, as a bank with 17 million clients, we can use that data to help us make decisions. And what we have done mostly is using machine learning and artificial intelligence for data collection. So far we are serving about 8.5 million customers on the digital platform. And this is about 50% of the total number of clients that you have seen. And what we have seen is customers are now able to log on to any bank channel wherever they are and are allocated pre-assigned limits based on affordability and their ability to pay back the loans. And for example, in the food and agriculture space, most of those farmers who are in remittance-based value chains, for example, dairy, tea, for these farmers, a lot of them now do not need to come to the bank to borrow because through the artificial intelligence and machine learning and all those things that the IT people tell us, they are able to give them limits that they can self-serve. So again, we have, as I've said, we have digitized the remittance-based loans, and we are also offering digital training content and weather data to the farmers. To conclude, what are the challenges and opportunities I see here? As a bank, I've said we are trying to get to the 100 million from 17 million. It has taken us 38 years to get to 17 million, and we want to take 2 years to get to 100 million. So we must collaborate. But when we are collaborating, what are we finding? Players working in silos. So one is offering just one component, one is offering another component. And to get into those many numbers, then you need people who are more, what can I say, who have very integrated data that can help us to push these numbers. Again, specialization. If I am able to do financing, then let another player help me with what they have been able to specialize in. We are looking to explore complementing partnerships with fintechs and agtechs for the non-financial data. We are seeking to work with agro dealers for e-value vouchers for farm input loans and distribution. We are looking to partner with SACCOs for historic data on farm outputs so that we can also give them a digital, we can give them a credit limit that they can self-serve. And another thing we want to do is to digitize the ecosystems. Farmers do not work alone, but if you connect all the players in the value chain, then you will not need to have farmers struggle to acquire credit because all their information will be either digitized or you can get to learn more about them because of the player who works within the value chain with the farmers. That is it for my presentation, and I know we'll have a session where we can answer more questions. Thank you very much.
First of all, I want to thank you for attending our session this afternoon. My name is Deo Masawe. I'm a CTO for Bank of Kigali Tech House. I was referred as BK Tech House. And today I will take you through our agri-tech journey in Rwanda. So first of all, who are we? Bank of Kigali is a group. It's an entity of 4 companies. BK as a bank itself is the largest financial institution in Rwanda, followed by BK Insurance. Then we have BK Capital, which does asset investments. And then there is my company, which is BK Tech House. So Tech House was formed in 2016 with really a mandate to become the biggest and largest innovator in Rwanda and hopefully in the region. We have around 8 products in different sectors, primarily in education. We have 2 products. We have digitized education in terms of school management system and payments in all of Rwanda with 600 schools. We have 2 products in agriculture, which I'll talk more about. One in particular, SNS. But in agriculture, we have digitized common crops, input management system in the whole of Rwanda. And SKS is a platform for cash crop management. At the moment, we have coffee, digital chain, and next we'll do tea as well next year. In total, we have around 3 million users in our platforms, around 50 employees. We are semi-startup still, and 15 partners. And some of the key ones, including the Gates Foundation, who I know some of you are in the room, and RAB, which is Rwanda Agriculture Board, and NAEB, which is Rwanda Export Board. We have different services. Mostly we're a tech shop, but as you can see, we offer software as a service, data as a service, software on demand, payment gateway, Internet of Things, and broadband. We're an ISP provider as well. For this presentation, I'll focus more on SNS. So SNS, or Smart Nkunganire System, I'll just go through some of the numbers here. SNS started in 2017. I would say actively from 2018 to now, we have 4 years worth of seasonal data in our platform. We have managed to grow to 2.2 million farmers registered in our platform within 4 years. I think in a scale of things, given Rwanda is small, a country of 13 million people, it's a big accomplishment for us. And we are seeing anywhere between 800,000 to 1.2 active farmers in any given season. We have 55% of the farmers are male and 45% female. So a fairly good distribution on gender. We have 1.6 thousand agro dealers across the country. And some of these agro dealers, they're also aggregators and cooperatives as well. We have 440 distributors, district and sector agronomists. We are working with 27 suppliers and 43 distributors across the input value chain. As a core features, if you look at SNS, what we have able to do so far in the last 4 years, what you see in green are the things that we have in production today. So one is farmers registration. Essentially, at the beginning of the season, there's a government mandate to open the season that come through SNS. And every farmer who wants or is eligible to get input subsidy, they must come through our platform first. I think Rwanda is a bit unique. Our partnership with the government has really allowed us to scale quickly. This has actually come from the ministerial instructions during the season opening. And also, there's some other fundamental things in Rwanda that's been done. It's a very pro-digital country, as you're aware. So things like land, 90% of the land is digital, including farming land, as well as NIDs for all the farmers. So it allows the scaling and integration implementation platform from our side, not a bit easier necessarily, but we can leverage the existing platforms and capabilities within the country to build and scale faster. So in addition to registration, we also do profiling. So who is the farmer? What are they growing? Where do they live? Their geographical location. We do their land profiling as well. What kind of land do they have? We do input management, and this is full digital. There is no paper. We have payment management, so they can pay through our systems. We have document management, e-signatures, handoffs between the suppliers to SMEs to a farmer. Communication module, reporting, analytics, and advanced analytics we have provide to different organizations, mostly the government, but even NGOs, as well as extension services and warehouse management. And then we have a set of features that are in progress that we're kind of building and looking to roll out with SNS V2, which we'll be piloting in next season. So those are credit scoring, financial services integration with different financial institutions. So I was very happy to hear that 30% commitment from Florence. I'd love to talk to you more about that. Insurance services, we have partners in the room working with Eco Africa to roll out the digital insurance for farmers. Smart farming, incorporating satellites, market linkage, as well as advanced CRM. We process around 69,000 metric tons a year, worth about $80 million in terms of input value into our system yearly. So a bit more on data. I know this session is mostly on data, how do we capture data from the farmer, and how do we use it. In SNS, if you see on the left-hand side, this is a current data set that we have in our system. So briefly, again, the farmer identity, who they are, their profile, the agro dealers as well, all the SMEs, the crop seasonal data. All right, so we follow the guidelines that are set by RAB, all the seasonal information, including the crops, recommendation fertilizers, and seeds. We're also capturing plot data. This is through integration with the land management system. In real time, we can pull geocodes for different farms in Rwanda as they register in real time. Input calculation. So our platform will actually calculate based on your farm, your land, and the type of crop that you're planning to grow for that season, will actually calculate recommended inputs that you require. We also have farmers' orders, as I mentioned earlier. We fully manage the order from a farmer buying an input or placing an order to paying, to essentially receiving, to transport, the entire value chain. We also have deliverables for the inputs, and we have a coffee payment, which is a wallet through our sister company, where farmers they can trade through digital payment. New data set that we're working through now, we have integration with MNOs to end up with the farmers they can pay through mobile money, like equivalent to M-Pesa here. We are also looking at to incorporate satellite data from NDVI insurance. We are also looking to incorporate crop monitoring into our system. Production data, production is something that we really keen, especially going forward with the financial inclusion. The challenge we have now is how to accurately capture the production from the farmers. So we are trying to look into 3 ways. One is the farmer reporting their own production at the end of every season. And second is to leverage our warehouse partners and off-takers. And third, hopefully, is to build and incorporate satellite imagery that they can help us with basically production prediction and look at analytics between prediction versus actual production data within our system. We have a project with RWASIS in Rwanda as well. This is on soil testing and how we can improve soil services. And then the new data that also we're looking forward is really transactional data that's going to come through from the loan perspective and insurance that we're planning to offer. Just briefly to give you a landscape for the last 2 seasons. At the moment, what we have seen, we have done input management, I think I would say, for the last 4 years, as I mentioned. But for the last 2 season data you see on the screen here, we are seeing a gap where only 56 to about 70% of the farmers who requested for inputs actually go and pick up the inputs, right? So there's a big gap. There's 35, 40% of the farmers who are still, even with a subsidy, and the subsidy in Rwanda is around 40% of the value. But even with a subsidy, there's quite a bit of number of farmers who are not picking up recommended inputs, which means it does impact their production as well. So we did some field surveys, and one of the key reasons is really a financial capabilities, right? Most farmers, they say we can't afford. Hence us looking into some solutions and see how we can help those farmers to cover that gap. So luckily, I think we're in a bit of a unique position. We have enough data in our own that we're able to create initial scoring model for the farmers. Now, on its own, it's not conclusive, because as you know, to have a true credit scoring, you also need to have loan repayment data, which is very hard to get. If you go to the banks, farmers, they're unbanked. And MNOs, they protect the data, right? So it's really a challenge. But we have enough data set that we can see a trend in behavior, and I'll talk more about that we are able to score the farmer and give a preliminary score to hopefully work with the financial institution that they can come in, as well as MFIs as well. They can start lending or lending more to the farmers. As you're all aware, I think the money that goes to the farmers is very, very low. I think you mentioned about 1%. In Rwanda, is less than 4%. So that's what we've been doing so far. So what we have done, we have created a model, a scoring model, that's based on a farmer's characteristics, their age, whether they're cooperative or not, their social behavior, their tenure within our system, and their seasonal behavior also. Are we seeing, are they repetitive, are they consistent, or are they seasonal farmers? We also look into the agronomic characteristics. Where are they farming? What are they farming? The average calculated land for every season. Number of farmers' crops. You find that farmers, some do common crops, but maybe they do cash crops as well to supplement their income. And the crop farmed per season, and type of crop they're farming. We are also looking to all the characteristics. And again, this is order based on the transaction that we have in our system so far. So the value of the order, the value of the fertilizers of the order in the past seasons, the varieties of orders, and how consistent they've been in picking up and paying those orders on time. So based on this, we have come up with the initial scoring model. And we're able to, I think out of 2.2 million, we have a good set of 20 to 25% of the farmers who they came around the group A, group B, right? So that gives us around 400, 500,000 segment to begin with to pilot our solution. Now, I must say, as we know, credit is not a solution to an end, right? It takes partnership. The key is to see how we can de-risk, farming the agriculture, because that's a really big concern for all the financial institutions. So we're looking in several metrics. One is how do we de-risk the individual, the farmer, in this case with the scoring. Second, how do we de-risk the market, right? So we are looking at the farmers who are they connected to the cooperatives? The cooperative have off-taking agreements, right? Also, and if they're not, how can we help them to connect to the off-takers? Transparency in pricing as well. How can we help the farmers get the better pricing for their crops at the end of the season? We are also looking to de-risk production as well, right? So one way, again, is insurance. We can help the farmer get insured for their crops. But also extension is really a major component, right? Extension in terms of best practices, farming, even lending, right? If the farmer has never take a loan before, how can you help them manage their funds, right, on their first loan? So we have incorporated extension program as well, no problem. And lastly is we're looking at essentially the right amount of inputs and recommended input that they requested. So just in closing, we are running a pilot starting in January. We are targeting to have around 16,000 farmers, 800,000 USD in terms of loan. We are working with 44 cooperatives. The loan amount to be around 50K to begin with, which is $50 at minimum for the farmer. And primarily, we are going to focus only on input for now, but we're also looking into working capital loan as well. So I think in closing, I would say, again, a call to the financiers. We need you. To developing partners, we need loan guarantees that can help the financiers, become more lenient in helping the farmers. And we need partners, all of you in the room. So that's the end of my presentation, and thank you for your time.
Just want to take you through what we do. Amtech, we have been that in existence for, I think, more than 10 years. But this product is really new. And we started this product in 2018 by scoring the farmers. We have been able to give out 50 million USD on this product. So let's just get started because basically what is very important for us is data that we capture from the farms, because the factors that constrain financing farmers, one is basically the data that allow us to lend. That's one. Number two, lack of collateral to secure that is the amount to be lent. And then number three is high transactional cost. And then number four is lack of data for assessing the risk. That is what I'll be discussing. So basically, less than 4% of commercial lending goes to agriculture. I think you have seen there it's 1%, okay, basically. And perception that is of agriculture, because I have I think this year, we were trying to get some financing for two products. One is ACS, and the other one is for logistics, okay? For the logistics, it took us 1 month, and we had 18.2 million US dollars, For the agriculture, I think it's taken us more than 10 months, and we have not even gotten $1 million US. Okay? So basically, what I'm saying is that perception of agricultural loans being too risky due to drought, pest, low prices, and other risks farmers are exposed to. Number 2 is low last mile matching discourage banks from taking risks to learn, and then the market and repayment rates, and lack of data on farmer financial history to access creditworthiness, and unavailability of collateral by the smallholder farmers. So what the solution that we have brought in, and I said it has worked for, that is from 2018, is we develop innovative solutions that is unscalable, that meet that is the business and the creation need of financial institutions and cooperatives to help them deliver value for their members. Okay, one is specialized for various value chains. In most cases, dairy, coffee, tea. We are in avocado. We are also in chicken. Use of farm labor data that is backed on data that is backed on farmer transaction with farmer organization, and also faster turnaround time for loan disbursement. Okay. The second one there, use of farm labor data. So what we do in the field is we go to the field, and then we go to the farm, and then we look at what the farmer have, okay? We look at one, the size of your farm, number of trees in your farm, number of chickens, number of cows, and then we put on our database. That one is basically, we are using that one to, as we say, to the risk, okay? The other very important thing about that one is that we use people, what is called village managers, to update this information continuously. We pay them some commission on the number so that when a farmer sells his cow during that month, what happens? You need to make sure that it is not in our database. So we make sure that those information are basically on our database, okay? So this is the system that we develop. It's called ACS. It's a credit scoring system that uses ML, that is machine learning algorithm, to produce a relevant credit score for the smallholder farmer. So what we do basically is we have like two systems. One is the one to be able to give out, to lend, and to receive the payment. The other one is to make sure that we have the history. The other one also, we have the produce, okay? Like if you have milk, then you have some other data in the farm, and then we have already captured your history. That means your payment transaction for some time. Then we can be able to allow you to lend, okay? So after deployment of solution, farmers who are members of the signed-up cooperatives are able to access this system to be given some capital, depending. We are giving out between 500 shillings to 700,000 Kenya shillings, okay? So the very important thing, what this system does is like uniformity in credit scoring. Number 2 is faster turnaround time. There is no use of paperwork. Okay, reduce cost as paperwork is eliminated, enhance control in loan management, and also increases profitability. Our solutions, when we put the solution to a PO, a primary cooperative or a cooperative, it does almost everything. It's an ERP. It does profit and loss accounts. It has the balance sheet. It has all those things in one particular platform. Okay. As I said, we have reached 50 million loans that we have dispersed. 63 farm organizations on financial institutions serving more than 4 or 5,000 smallholder farmers, and over 70 SACCOs, and reaching 249,006 persons. You can be able to see that is the EBIT, where we have reached from 2018. We started from less than $50,000, and you can see where we have reached in terms of the outreach. So this is our farmer breakdown. On the ACS, we have 329,003. This is SACCO. We have 3 SACCOs with 523,000 customers reached. We have these are the products which we are developing specifically for this on this product. Okay. So scalability delivering, that is on the multiple SDGs. We are on number 1, poverty. We make sure that we remove the poverty. Number 2 is zero hunger. because we make sure that we increase productivity, we make sure that there is profit, and also we make sure that the loan that we are giving out is cheaper than what other people are giving out. I think the Hustler Fund is a bit now cheaper, but I think after the Hustler Fund, now there is now the ACS loan that we are giving out, and the rest goes up. So that is the reason why we want to make sure that there is no poverty. Remember, by the way, when you give a farmer a loan, let's say at 10% per month, that is making that farmer poor. That's basic, okay? Because I know some people will say, no, we are in business. That's fine. But are we making sure that that farmer is not poor, okay? Number 8, decent work and economic growth. And number 5 is the gender equality. On all our data, because you don't only just capture the data, that's the normal KYC. We capture quite a lot of information, okay? How do we get our customers? We utilize the basic things. Prospect through customer calls and proposal that. The other one is referrals. The other one is participation in workshop like what we have today. Growth of market. So this is what we do that we want. That is passive high risk of lending credit. What we do to address that basically is collection of farm level data. We call it FLMD. And then provided a credit scoring system that enables credit organization to lend and to lend more. So instead of, let's say, if you have milk, like me, I'm a farmer, I produce 600 liters per day. Instead of getting like, let's say, 3,600 today, or 36,000, I can be given 72,000. Why? Because I have other assets in my farm, okay? Thank you very much.
What we do as social lender is we offer financial services based on social reputation. I'll tell you a bit about what we do, and hopefully with question and answer, you will hear more information. So over 50% of adult Africans lack access to formal financial services. We've heard that a lot today. And about 50% of those people are farmers or other people that work in the agricultural value chain. The problem is trust. Financial institutions don't have a way, better ways of being able to establish trust on these people. These people don't have the right collateral, and also the traditional credit scoring system is broken for them. But at the same time, we know that people are connected in myriads of ways. Many of us in this room are connected. Even offline connections can be digitized. And that's what we did at Social Lender. We look at people's connection, their engagement, their network, and things like that to form a score on them, the social reputation score. Now, with this score, the financial institutions are able to know these customers better. The financial institutions are able to offer financial services to these customers. Social Lender works both on the online market and the offline market. And so just to say, we are not social media lender, we are social community lender. So we work with messaging platforms, we work with mobile apps, we have our web interface, we have our APIs, and for the offline market, we work mostly with USSD and SMS. We've been working for a while now. We have just under 200,000 users on the platform. We have 7 partners in 2 key countries, Nigeria and South Africa. In Nigeria, banks like Sterling Bank, FCMB. And then in South Africa, we're running a pilot, or we ran a pilot and then looking to extend that with ABSA in South Africa. In terms of the score, we've also done quite a number of pilots around just establishing, one of them with Mexico, establishing if this is a good predictor of risk. And we are doing very well. But obviously, we need to scale. We're looking at, and then we have quite a number of other partners that have been able to help us over the years for us to get to where we are today. But we also discovered that our customers don't just lack access to the technology. They also lack access to the basic education to be able to use that technology. And so what we had to do, just in Nigeria, is to build a network of ambassadors and agents in local communities to help us, first of all, educate these customers, and then help them onboard onto the social lender platform. And these are some of the pictures of those kinds of engagements. In terms of the use cases, one of the key ones is agriculture. We partner with OCP. OCP is a fertilizer company, one of the largest in Africa. They are also in Nigeria. And we partner with OCP to be able to offer input credit to farmers. On the platform today, the only input credit available is fertilizer, but we are looking at being able to extend that into quality seedling and many other things as well. We've got also microinsurance. This is still piloting, but we've got 2 microinsurers on the platform as well. In terms of for the offline market, the engagement starts with community sensitization, where our ambassadors and local agents, our ambassadors are people like NYSC corpers, fresh graduates, but generally they must speak the language of the community. We work in northern Nigeria, for example, in Kano and Kaduna. Right. The local agents, however, are people that live in the community. We call them local guides, actually. And what happens is that we start with community sensitization, going to those communities, telling them why they need financial services. Because sometimes we talk about financial inclusion, but we forget that what we should really be talking about is economic inclusion. Because we say we want to bank the unbanked. Do the unbanked want to be banked? So we start with community sensitization. We invite them to financial literacy. In financial literacy, we developed a curriculum focused on financials, right? And then in partnership with OCP, we also talk about agriculture best practices, basically use fertilizer, right? And several other things along that line. Then for many of these people, they don't even have a bank verification number. In Nigeria, you need that to be able to open a proper account. And so part of what our ambassadors do is they are able to take those bank verification machines so that we can register the farmers for BVN. Then we're able to open a bank account for them. Then we're able to onboard them onto the social lender platform where we're able to score them. We're able to score them using their connection, using things like their social guarantors, their social referees, and a lot of other data points that we are able to pick up in the local communities. It's important to mention that this is the offline market, meaning that the users are able to access the platform using USSD and SMS. In terms of the platform itself, it can actually be used for much more. And what I talked about, I needed to cut my presentation short a bit, is for use case in agriculture and use case in the offline market. But the truth is that the platform itself, the concept that we are driving, the social reputation score, can be used for much more. Several different industries, credit scoring, alternative credit scoring as we're talking about. KYC is also a big problem in Africa, and several others as well. But we're still young, we're still growing, and so we're inviting partners to join us to build the social network for trust, credit, and more. Thank you.
In this specific session, I'm going to share a little bit about our work that we started about 2 years ago around blockchain pilots, and really looking at emerging technologies, whether it be blockchain, DeFi, smart contracts, and how that can help unlock some of the barriers and opportunities we've been talking about all day. And I fully recognize that the last 3 weeks have not been that great for the emerging technologies industry, more so in the crypto side than technology. But so I, from the beginning, I'm happy to have any questions about that, but I also want to separate crypto and exchanges from emerging technologies, which we all use. Our phones are all in our pocket, right? Which is, in 10 years ago, was a very emerging technology. For some people, it still is a smartphone, a very emerging technology. So I think if we keep that abroad, it'd be, but very welcome to have really serious discussions on it. So really, I think I just talked about what Mercy Corps Ventures does, so I won't repeat myself, but part of the fuel to accelerate growth beyond capital investment is around extra work that we do that is non-capital. And part of that is these pilots that I mentioned that we started around 2 years ago. There's a link up there if you need to come find me and I'll share it, but it's on our website so it's easy to find. All the pilots are up there. So I'm just going to share a few pilots. There are more that we've done, but I tried to have relevant ones to agriculture, financial inclusion, although because it's blockchain and fintech, there are a lot of fintech ones that are financial inclusion also, but let's see the ones that cross over. So this was actually with Ewan and Iker in terms of smart contracts and weather insurance for farmers in Africa. So really leveraging smart contracts to make transactions and payments much quicker and transparent. I won't get into repeating what's said on the slide. It's out there, or please grab me later. It's better to have the presentation that way. But basically, in the end, it was trying to leverage the technology to have more transparency and farmers be able to get their payouts earlier. Because in the end, that builds the trust on the product. And I think insurance, not my business, but I think your business, it's a tough thing to build a trust on for a lot of farmers. So that was one piece. And then I'll share some live pilots. Again, there have been plenty of other pilots done that were a bit more focused on fintech and DeFi, and let's say cross-border payments, etc. So I didn't put those on for this discussion, given that we're focused on agriculture. And then this one is actually with, and the CEO is around, but not in this session, I guess, Alex and Cinch, and a few other partners, and really using DeFi-enabled salary advances for smallholder farmers. So the core partner here, Cinch, basically does land aggregation as a service, and they want to be able to give advances, and then using new technologies to be able to give and unlock advances, but also really then track different pieces of that chain through different farmers and unlocking different benefits. There's innovative buy now, pay later products. And so I think if you're familiar with, there's food systems on from farmer on out, but FMCG is also, to me, a big piece of the food system, which is, wherever the production is down to MSMEs and dukas, and people who are buying it for whatever reason, how they're buying it. And so in terms of unlocking credit or financial inclusion at that level, there's a pilot that we're running basically looking at cross-border liquidity to have lower credit for MSMEs and others. And in an ideal state, getting the alternative data sets that then local banks and others can plug into and then use for creating products and lending also. That's it. I'm basically going to leave this slide up in terms of food systems and value chains and where we see the opportunities and barriers, and then why we think emerging technologies are an important piece of the solution and conversation for kind of these opportunities and barriers.
What I wanted to do is just really set the problem right, and I think this is why we're here today. Everyone's familiar with the problem, and it's really this disparity between the importance of the agricultural sector to African economies. The figures there: 80% of food production from smallholder farmers, 53% of employment in SSA in the agriculture sector. It's over 50% in Kenya, over 60% in Tanzania, and just this real core to developing countries that the agricultural sector plays. On the other side of that, we have the lack of access to financial services products, or the lack of take-up of financial services products. 4% of private sector loans to agriculture are through the sector, even though it's over 40% of GDP. And I think for us, a real reason for that is the lack of insurance, or at least the penetration or take-up of insurance by smallholder farmers. And this just makes sense, right? If you buy a house, you need to insure the house. If you're going to borrow to buy the house. If you're going to borrow to buy a car, you need to insure the car. It's normal things. And until that figure can be raised, the other figure is not going to be increased significantly. So insurance to us is a really key part of enhancing the access of smallholder farmers to financial services. What's gone wrong, right? I mean, well, why is the figure that low? And I think that there's several things around that need to be raised. Firstly, we see a massive information gap between farmers and service providers trying to reach farmers, and this can be banks and other institutions. There's a lack of data, a lack of understanding as to what are the risks the farmer faces, right? What's the issue? Why is he not repaying back the loan? What's which are the farmers I should lend to? What is the data that's going to help me lend to these farmers? So I think this has led to high NPLs for banks lending to farmers and it's led to an unwillingness of banks to lend to farmers. Data is king. People have said it before, right? The more data, the more accurate the data, the better the data, the more easier it is to provide financial services and other services to farmers. The other thing is that I don't think that farmers have been particularly well served by the insurance community. Historically, because there's been this data gap, there's been very human-centric, hands-on insurance policies that have required people to go to farmers, to do crop cuts, to do assessment reports, to do loss reports, and this isn't consistent with insuring large numbers of farmers. And even large-scale government projects at the moment, we're seeing 50 to 60% of the premium going on the actual implementation of the project. And what this means is that you're only getting 40% risk premium, right? So when you look at the claims percentage, it's actually 20 to 25% of the total premium being paid. Understandably, farmers are pissed off, right? I mean, they're paying a lot of money, they're getting the subsidy, they're not getting any claims, right? And this is one of the core reasons why farmers don't like insurance, haven't been taking up insurance. Farmers like claims. We all like claims. If you don't get the claims, insurance is not going to be popular. The other thing is the claims payments have been slow, right? And historically, how we've been doing insurance, we've been sending someone to the field, they do a crop cut, they send that to, well, they analyse that, they send it to the insurance company sits on it for a month or two, the insurance company sends it to the reinsurer sits on it for a month or two, he changes his mind, it comes back to the insurance company. Farmers are getting claims payouts a year after the actual claim. He has no idea why he's getting the money, right? I mean, he's getting something in his M-Pesa account, no idea what it is, what it's related to. And this leads to the next problem, which is lack of understanding, right? I mean, we're not really providing the tools, the equipment, the infrastructure that can allow farmers to properly understand the product we're selling. A guy turns up, he sells some insurance, he won't see him again, maybe he'll come to do a crop cut at the end of the season, he'll get some payments a year down the line. So farmers are not being serviced or haven't been serviced well historically by insurance companies. So what's changed, right? I mean, what are we trying to do? How are things different now that will help us solve this problem? The first thing for us, and what we're really trying to focus on, and in particular around making products affordable for smallholder farmers, is using remote insurance, and in particular, satellite and parametric solutions. What we believe and what we're selling is the fact that there's been a fundamental change in the accuracy and the consistency of satellite products. So what we're seeing is historically you'd have a product, what we work on is essentially a pixel. So we divide the whole country into pixels, those pixels would trigger a claims payout, and based on the triggering of the index. Historically, you've had pixels of about 10 kilometers. There's a lot that can happen within 10 kilometers. I mean, go to a country like Rwanda, you have hills, you have streams, you have different soil types. So one farmer can have a claim whilst the guy next door doesn't necessarily have a claim. So index insurance, which by its nature is cheaper, right? Because you're not sending the people, you're actually able to monitor remotely, hasn't been working properly. This has changed. The products we're now using has a granularity of about 100 meters, right? So we're now talking about a hectare, which is one, maybe two farms, depending upon the size of the farmer. The other thing we're doing is we're now measuring soil moisture. Old products used to be based upon rainfall, right? And rain can go down slopes based on topography. Depending upon the soil type, it might not actually be taken in by the underlying soil. What we're now measuring is the actual moisture available to the crop at any particular point in time. So what we're getting is something far more accurate and far more representative of the actual conditions the farmer is facing. So that's it. So index insurance, we're seeing something which is far more accurate, far more able to monitor what's going on at the level of the individual farmer. The other thing we're overlaying on top of this is picture-based insurance. And this is going to be a game changer. So what we're able to do is using a smartphone, using an app we've developed, a farmer can take a photo of his crop and then upload that photo to trigger a claim. So on insurance, this is a wonderful product. I think in particular when you look at index insurance, the gap that's historically been missing there is around pests and diseases. You can provide the best drought cover, the best flood cover, but the piece around pests and diseases has always been hard to cover. What we're able to do with this now is actually provide an entire gamut of cover to farmers, from drought through to flooding, and now including pests and diseases. I think more importantly to that is where we're taking it. We're using AI and machine learning to provide advisories to farmers. So the farmer can take a photo of his crop, he can upload the photo, we can send back an advisory by SMS saying, the crop is short of X, it's short of Y, it's too close together, too far apart. And again, this is something that's going to assist in the uptake, assist in sensitivity to financial services through digital means. So the other thing around satellite, parametric, the type of insurance we're trying to sell is that you can sell it digitally, right? And this allows us to further reduce costs. At Acre, we have an entire chain, and the entire insurance cycle can be managed remotely. So we can onboard farmers, they can register, they can be priced remotely. We can monitor what's going on during the life of the crop. Using See It Grow, using pictures, we can actually tell over the life of the crop what's going on. And then at the end, we're using blockchain to trigger claims payments. So what are we doing exactly? It's essentially we're using blockchain, where we're issuing smart contracts to farmers. So contracts that are on-chain and actually with the trigger and the contract, the details actually on-chain. So when there is a claims payment, the payment happens automatically, right? And there's no waiting for the end of the season, then for the insurer to sign off, for the reinsurer to sign off. When there's a claims payment, the payment is made automatically. We're even making intra-season payments, right? And if there's a claim is triggered due to insufficient soil moisture, we pay the claim. Done. This is great. I mean, obviously faster claims payments. We're also using a smart contract, so we've now developed the functionality so a farmer can actually query his contract. Rather than having no contact with the contract or understanding what's going on, using USSD, he can actually find out, what is the status of my contract? What's going on? Am I due a payment? And then he can query that, obviously, with us. Costs are obviously reduced, which is great. Making insurance more affordable, cutting down claims administration costs. So that's another positive. And we're also providing clear audit trails. So using blockchain, we're able to, blockchain being tamper evidence, we're able to provide clear audit trail in terms of claims payment for our insurers and reinsurers. Sorry, yes. So just the conclusion. Basically, what we're doing is greater, and that's the summary. We believe fundamentally with these products, we're really able to bring the cost of insurance down. We're really able to access more farmers, and we believe this is something that will scale significantly across Africa.
Great, thanks so much. So we really heard a lot about